Okay, awesome. Josh, thank you for joining us.
Yeah, it's my pleasure. Glad to be here.
Great to have you. Now, investor series, so I'll give a very brief description, but I would love to hear from your perspective exactly who you are, what you do, more about you, and then we'll get to the company, right?
Sure,
So,
sure.
uh, Inrevenue Capital, right? You're a VC out of Arizona. Um, Tell me how you got here.
Yeah, probably the least traditional path to venture capital out there. I'm not a venture capitalist, an investor, a financier, any of those things by trade. I'm an operator, and more specifically in operations, I am a sales, go-to-market, partnership executive, and practitioner for that matter. So
Yeah.
when I graduated college, let's say 20 some years ago, I didn't really want to go to work for anybody. So I tried my hand at starting a business. I started a production company. We did live events and video and stuff like that. And I did it the right way. No experience, no money, no contacts. That's the way to start a business, right?
Oh yeah.
And my business partner and I did that for about 5, 6 years. I would say we were moderately successful, but what we learned relatively quickly was that we didn't start a business. We created jobs for ourselves. There was no scalability. There was no leverage. It was just us grinding. And if we weren't grinding, we weren't making money. So we decided we needed to gain more of those three things: experience, money, and connections. So we parted ways and liquidated that business. Wasn't I wouldn't Nothing I would call a successful exit, just more of a parting of ways. And I went and took over sales and marketing for a local e-learning company here in Arizona. And they were at an interesting inflection point because their biggest client base was a lot of airlines and companies that were heavily affected by 9/11. So they went almost a year without any revenue coming in and kept offering services to keep their client base happy. And they were a traditional production company actually, and decided to use that inflection point as a way to say, how can I take these resources and move them into something else, something that's more modern? So they decided e-learning was the play. They brought me on to run sales and marketing. And really what my job was to say, listen, this is a player coming into the e-learning space that is already crowded. You weren't going to go jump into higher ed e-learning. You weren't going to go jump into corporate e-learning because those spaces were crowded and we didn't have the systems to really tackle that space. So what I did was, I was always a big proponent of, was finding niches, vertical markets that we could tap into. And we looked for two things. One was low sophistication, high compliance. And how could we go into those markets, partner with a subject matter expert, build a brand around the solution for that specific market, and use the e-learning company as a shared service in the back end that nobody really knew existed. So I did two things. One, I took our existing book of business, figured out who we can convert to e-learning, and then cut the rest. And then two, went and out and looked in for these vertical markets. And we had some moderate success, right? We built 5 different vertical market companies. We partnered with subject matter experts. We turned their content into e-learning content, branded a business, and went out and sold that platform. It was fun. We did moderately well. I got to, be a mini entrepreneur within the constructs of a business,
Yeah.
and, mostly commission-based type of work, right? Like once I built a business, as we sold it, I earned commissions on it. In that time, it was very interesting. I met a former friend, not, I wouldn't say a former friend, reconnected with a friend who was in the payment space, and also was creating this services startup. So I sold him e-learning for his payments company because he was looking for something as a value add differentiator. He sold me Marketo and implementation services for Marketo, which is a marketing
Okay.
automation
Yep.
platform. And we kind of built an interesting relationship that way beyond just our friendship as kids. Fast forward, let's say 5 or so years later, I get a text from him. Hey, man, I need someone who understands this space to help me sell these services. We're starting to gain a little bit of traction. And I was looking for a bit of a shift. And I said, yeah, that sounds good. Let's talk about it. So I wound up working for what is my current business partner, Justin Gray, for about 10 years in this startup that sold professional services around the marketing and sales tech landscape, and grew that business from when I started to, say, about 2 million in revenue. When we sold, we were roughly 22, 23 million in revenue.
Yeah.
And we worked, it was awesome. So I did sales and partnerships, and we really tapped into the marketing and sales tech ecosystem. In the early days, Marketo was our premier partner. That was all we focused on. And we sold implementation, optimization, and staff augmentation. And then we grew our suite of services around that into more strategic upmarket, go to market. And we had customers, everything from high growth startups to Fortune 10 types of companies. We exited that business in February of 2021. Justin and I stuck around for about 18 months in transition. And I'd say in the summer of 22, trying to figure out, what we wanted to do next. We both decided it would be worth doing something together. I participated in that exit. It wasn't my exit, it was his. But
Yeah.
We started to put our heads together. And in that time, he had really been doing some investing with Stage 2 Capital. If you're familiar with them, they were kind of the originators of the operator capital movement, where you had these, traditional venture people who were tapping into an LP base of operators, sales, marketing, those types of things. And in his experience, he saw that it was very lightweight, the expertise that was being drawn upon from that LP base. And that LP base didn't really have the capital to do more than write a single check. Like, you ask a marketing or a sales executive to write a 250K check, they're going to do that once and they're not going to do it again until they get returns, right? Like, it's just
Yes.
not in there. And no knock against them. They're just, right.
It's where they are.
The pockets aren't that deep, right? And you could put me in that same category, right? Like I was probably in that same space. So we really had an affinity for high growth. We really liked that, 0 to 10
Yeah.
stage. And we thought that we could do the operator capital thing better by basically putting the VCs as the operators. We invest capital. We go out and raise money through, more traditional funding sources, high net worth, small family office, that type of thing. And then when we invest capital, we invest really heavily in hands-on go-to-market expertise, sales, marketing, partnerships. Those are our three pillars. And that's how we built the business. So a very non-traditional path to venture capital, but here I am a year into it and having a good time.
It's funny you say that, and that's such a unique story, but it really is not. The idea of operators becoming VCs is so much more common now. A little different from yours, which in the sense that a founder exits and they start a VC firm. Now, investment decisions is not always accompanying success from an exit, but
Right.
what you mentioned is also another key component, which is, hey, you need to be able to run a company in order to understand
Right.
how to invest in a company or how to identify companies.
Correct. So, we didn't have any delusions when we started this firm that we were going to, one, get looks at the best deals,
Yeah.
and two, have the trust in enough people to really start to get LP base in a really fast manner. So what our cheat code was for that essentially was, we believe strongly in partnerships. And even when we evaluate a company, they need to have a partnership ecosystem that's either untapped or is, on its way. It's the same for us. 90% of our deal flow comes from other venture capital firms, right? Much bigger than us, much more established, much better eye for what a good investment looks like. And they want to leverage us as a value add on the go-to-market piece, right? So, through my career at LeadMD, I actually had started selling to and through venture capital and private equity as one of my partner channels. So I had started to build a network of those folks that I could lean on, even as we were building the thesis for our company, to say, hey, this is what we're thinking. What do you think? And they could poke holes in it and say, well, you're not thinking of this, blah, blah, blah. But we got to the point where there were a small handful of those folks that said, listen, you build this, we'll co-invest with you. I love the value add. It's a protection for our business. We syndicate most of our deals anyway, that type of thing. So now, in year one, we made 3 investments. All 3 of those were alongside of a lead investor who is a more established venture capital firm who has, legit biz dev, deal flow, legal, diligence, those types of things. And where we add value, even in that process, is we look at diligence through the go-to-market lens, which they may not be as good at, right? So we're now adding value in diligence that's beyond the more traditional things. So I don't know when we'll lead a deal, but it's not in the foreseeable future, right? Like right now, we look at it through, we partner, we add value where we know we're strong, and we move forward that way.
That's what I find fascinating about your group is that, you know, every VC wants to lead a deal, and there are a variety of reasons why they want to do that.
Sure, I
Maybe
get it.
control being one of them, having a say in how the shareholder agreement is
Yeah,
structured,
the terms. Yeah,
all of those things, right? But then more and more I'm coming across investors who just don't want that. They just want to say, okay, here's my capital, here's other value add that we're bringing to the table, and
right.
we don't want the headache of being a lead investor. Um, Going back to Justin a little bit, I mean, so that's been your background. Um, what's Justin's sort of input and contribution to this process? Because of course he was an operator as well. What other things are his priorities in the group?
Yeah, Justin had this lead MD, I think was his fourth or fifth exit. So he's had several, successful exits as an entrepreneur. And I think that gives him a very unique lens through how we attack these different companies, right? And what I tend to see with him, like I'm super hands-on in like the sales and the partnership angle,
Right.
but I don't really stray too far from that. I find Justin does a lot of executive counseling. It's just like,
Very interesting.
you know what I mean? It's almost like, dude, how do you deal with this? It's almost just like having a lifeline every day
Yeah,
that you can pick up the phone or send a Slack or whatever it is.
yeah,
Just be like, dude, I'm running into this thing. What would you do? And he's really, really good at that, at getting people to think differently, and getting them to think about how you create a common thread from end to end that's all tied to revenue in the business. And a lot of times, especially early stage founders, don't think about tying every function in the business to a singular common thread that's revenue driven. And he's really, really good at that.
right. So you're based in Arizona.
Correct.
Justin is as well.
Yeah, Justin and I are in Arizona. We added a third partner in April of last year who's based out of Incline Village in Lake Tahoe.
Okay.
But he is also an operator. So he was employee number 2 or 3 at SalesLoft, which is a sales tech company out of Atlanta. They
Yeah.
had a nice exit to Vista a couple of years ago. And he ran every function in that business at some point in his tenure there. So really, really cool background. And SalesLoft was a partner of ours, Lead MD. So that's how we got connected.
It's very cool. Now, knowing that about you, that you're based in Arizona and now Lake Tahoe, knowing one of your portfolio companies being a friend of mine, I'm
Yeah.
curious as to what is your reach in terms of where you invest, what you're looking for, and etc.
Yeah. So geographically, our bounds are really North America. And we don't really care too much about the Southwest, even though we are trying to bolster the Southwest and specifically Arizona as a region that matters. There
Yes.
are a couple others here, specifically Phoenix Ventures, led by Greg Scoresby, who had a nice Phoenix based exit, and AZVC, led by Jack Selby, who is a Teal Capital fund manager out of San Francisco. Those are the 2 largest funds here in Arizona, and we've partnered with both of them. So, that's a good thing. And we're trying to build this ecosystem, but focusing solely on Arizona is not a thesis that we think we can do. It's just not scalable for us.
Yeah.
So,
What about the
um,
description of the company? Like what
yeah.
kind of companies do you look for? What
So we
stage?
specifically look for B2B verticalized SaaS solutions, right? And we're looking for founders that essentially grew up in a space, in a niche, in an industry,
Yeah.
and sat in the seat of what is now their buyer, identified a problem and solved that problem through SaaS. That's who we're looking for. Oftentimes they're an engineer or a product focused person. They got some early traction by just pure founder led sales, network, knowing how to talk to people in their industry. And then they hit that inflection point where we're going to raise money.
Mhm.
And all these expectations come with that raise of growth, oftentimes, 10 to 20% month over month, 50 to 100 to 300% year over year growth. And they don't even know where to start scaling a
Yeah.
go-to-market function, right? So that's why that inflection point is so critical for us. We're looking for them to be maybe on the low end, 250K, on the high end, 1.5 million in annual recurring revenue. And at that inflection point where they need to start scaling go-to-market. And that's where we invest typically $1 to $3 million. And then obviously the sweat equity that we put in, the hands-on go-to-market expertise.
So that's very fascinating. So you come in at the point where they're just at that inflection point. Now, we started this conversation with you as an operator, you being an expert in sales and commercialization and partnerships. So, um, do you get involved in that process? Do you get involved in bringing structures in place? And how do you, in the point of decision making as to whether to invest into a company or not, what is your checklist to make sure that that company is primed for you to come in and actually add value?
Yeah, well, a lot of it, even in the highest level, if you take out what they're doing from a go-to-market today, is the founder,
Right.
because not every founder wants someone in their business every day. They just want to check, right?
Right.
And if that's the founder profile we're talking to, that's fine. That doesn't mean they can't be successful, but they're probably not going to be a fit for us, right? We're looking for a founder who's open-minded, looking for growth, and we're paying ourselves into a job here. We do a lot of work that we pay to do instead of getting paid for. So
Pretty
I
much.
it's one of those things where first that for foremost is founder fit, and do they
Yeah.
understand how deep we're going to be involved with them? And then the second thing is an evaluation of where they are today. And if you look at your friend who we invested in March of last year, he
We
had made
can
a
we can
couple.
uh we can talk about him. I think it'll be a nice plug for what he's doing. It's one of your portfolio companies if you want to talk about it.
Yeah, yeah. His name is Shiva Bhardwaj. He's the CEO of Pitstop, which is a fleet analytics solution based out of Toronto, where Saad is. And it's a really cool solution, right? Like his dad is an automotive guy. He's an automotive guy. He's created stuff from day one. You went to school with him, so like you've told
Yeah.
me stories about him tinkering all the way
Yes.
through school while you were partying. So
Yep. Pretty much.
there it is. But basically, they use advanced machine learning and AI to predict maintenance issues across a fleet of vehicles, right? And when we made our investment, they were doing really well. I think they're around 250K. That low end of ARR had brought on some good fleets. They had experimented with a few salespeople that had some varying degrees of success,
Yeah.
but what you found was a lot of the very prototypical red flags of founder-led sales. And what that looks like is they don't know how to differentiate interest from opportunity, opportunity from a deal.
Right.
That's one of the really big things right away. And when you're an engineer or a product led person, you think your stuff is so cool that if you just show it to them, people are going to buy it. Right. And that's very much the cycle
Yeah.
that the group was in. Right. They didn't really have a buyer centric sales process in place that guided someone along a process and led them to this is how we transact and do business together, right? And what are all the steps and stages and things that people, there's some sales is an art and a science, right? And a lot of the art stuff wasn't happening. It was very scientific because he's an engineer, right?
Yes.
So, getting through that, getting some real sales talent in the seat, building out a sales playbook,
Yep.
listening to their buyers. What do they want? What are they looking for? How do you decipher? The thing about AI right now is super sexy, right? So he's got an AI solution that could be a checkbox on an executive's list. Oh, we're adding AI to our fleet. Great. But everyone's interested in it. Everyone wants to talk to him, but that doesn't mean everyone's going to buy something. So really filtering through that and coming up with the process that allows us to, book revenue and get customers in the door.
Informing versus emotionally selling. There's two different things.
Totally. And then the other end of that spectrum is a company we invested in November of this last year, our third investment. They're at about 1.5 million in ARR. So on the high end of that spectrum, they've got a sales leader, they've got a sales team, they've got a partner channel built out that's really humming, right? I mean, their partner channels are delivering 100 qualified leads a month. They're growing at an amazing clip. So why add us? And they were like, listen, we know that this is just the tip of the spear. If we need to grow to where we want to grow, we need to learn how to crack mid-market enterprise sales. We're not built for that right now.
Yeah.
You guys know how to do that. So you need to help us crack that upper echelon of the market so that we can now start to build a foundation of higher ACVs, a little bit longer sales cycles. But how do we do that type of thing? So we can add value in lots of different places, from how do we get the thing off the ground? There's nothing here to we've got something, but we need to do to the next thing, right?
That's what I find, lacking in the VC space right now, right? And this is where I think traditional VCs fall behind a little, and where some of the more newer sort of neo VCs, let's call them, right, operators, etc., who are coming in saying, okay, we need to have a founder focus, right? So
Mhm.
additional and ancillary benefits to the capital that could include, mental health and or health services or things
Sure.
like that. But then the other aspect is, normally a VC will write a check and say, okay, well, here are your milestones before you get the next tranche.
Mhm.
Well, okay, well, how do you get there? Right? Like, what are you
Right.
doing to drive that company in that direction? I mean, sometimes the founders can do it themselves if they just need the capital. But I think you nailed the point here, which is there has to be some change of procedures and mindsets to really make that jump.
Right.
And unless you've done it before, you just don't know how.
Yeah. And sales is one thing, right? Like if you look at sales, but sales leadership is a whole other thing.
Oh, yeah.
So you start adding now these group of individuals that don't think like you, don't operate like you, and you're responsible for managing them. It,
Recipe for
it,
disaster.
right, right, right. So, a lot of times at this stage, it's a little, you might be in Shiva's case, you might be too early to bring on a sales leader, right? You need
Yeah.
some of these we like to coin founding AEs, these AEs who are early on, they act a little bit more like entrepreneurs. They are
Yeah.
good at figuring things out. They can build the plane and fly at the same time. It's
Yep.
a little bit of a different person than the person who spent their career at Oracle and they've got the playbook. Listen, you come in, this is how you run your business. This everything's here. Here's your training. Here's your playbook. Here's your toolkit. Here's your SC. Here's all that. Like that type of individual, nothing wrong with that individual. You have a great career doing that, but they're not a startup that's just got to build it and fly it at the same time. So,
So, what's your take on the following? Most of the families that I speak with, when they make an investment into a company, especially an early
mhm,
stage company, one of the biggest biggest requirements that they have is that it is not led by one founder. And secondly, the two founders can't be the same people, right? So generally when people get into business with one another, it's like, look,
yeah,
here's my buddy. We want to get into, business together, or we worked together. For example, like you and Justin, we worked together and now we want to do something else together.
yeah,
And usually when they're coming from the same place, whether it's a group of friendship or whether it's, from work together, they tend to have the same skill sets. And what's the point of having that? You tend to have to, want the yin and yang, right? So
yeah.
what you're pointing out, how do you fall on that, and how do you actually navigate that?
So I'll give you a couple directions on this. One is me and Justin because it's a good point, and we identified pretty early that we see things very similarly, which is part of the reason Sean came on board, right? Like we are so sales and partnership centric that we felt like that was like flooding everything, and we needed a little bit of a different voice. Sean has product background, he had customer success background, like a lot of these other things that augmented some of our weaknesses. So we identified that pretty early, even in our own business, that we needed another voice that had an exit in something else, even though it was, same, roughly the same space, but still somewhat different.
Yeah.
So that I think is important. In terms of co-founders, I'm okay with a single founder as long as they know their strengths and weaknesses, to your point. And we talk about building out the first five. Like, what are the
Yeah.
first skill sets across that first five that you really need to have that we're not going to make them? I don't think you need to make them a C-level or a co-founder from day one,
Yeah.
but the really good ones are going to stick out pretty fast. And those are the people that become your partners, your C-levels, and maybe you make one a co-founder later on. That's okay. But identifying those skill sets that you need to augment around yourself early on, maybe they don't all happen day one, but those are what we need to build into, right? Like you're an engineer, you can run product and engineering, that's fine. What does sales need to look like? What does finance need to look like? What do all these other things need to look like within your business? And let's start to round that out over time. I've seen some mistakes with co-founders too, even in the first year here, where people have gotten advice like that from VCs that has said, you need a co-founder, you need a technical co-founder, right? As an example. So they go out and they go through the things and they add this individual to the team because a VC told them they need a technical co-founder. And it's not right. Like that person doesn't have the same passion, skin in the game, and they don't act like a founder. They act like a technical lead. And there's a difference between acting like a founder and acting like a technical lead. And it can be, I don't want to say VCs are giving bad advice, but it can be bad advice to just have a blanket statement that says, you need a co-founder, go find one.
Yeah. No, no, I'll say it. VCs are giving bad advice. It's been going around a lot, and to be honest with you, VCs are smartening up to it because the one thing VCs are uh, from what I've seen are good at is taking the criticism.
Sure.
So more so than real estate, for example, right? So
Right.
in the VC space, talking to a lot of the families that do investments through our groups, the traditional mindset of VC is now shifting because what they've
Yeah.
understood is that to get deals, okay, take real estate. If you're investing in real estate, your counterparty is a building, it's a property,
Right.
right?
Right.
So there's not a living mechanism there. There's no push and pull factor, right? But in VC, you're dealing with people, you're dealing with founders, and
Right.
there is a supply and demand. If you can't meet their demand, you're not going to have your supply. So there's that check and balance there that works. Um, what I'm really interested in is what you mentioned about the operator. So a lot of family offices, as you know, are now directly investing into startups,
Correct.
bypassing the VC, doing SPVs
Mhm.
alongside VCs, and not going in as limited partners in a fund per se.
Mhm.
So family offices are now really looking at these companies as their portfolio companies, and they feel responsible for the success of their portfolio. So, you know, what should a family office look for when investing into businesses? And more importantly, what can they do to add value past just the check?
Yeah. Well, one, I think they should look at what are they expecting to get out of this asset class um, from a starting point? Because even us, we look at it a little bit differently than a traditional VC that has a 10-year horizon. One's going to blow the door off with a, say 50 to 100x exit. One might be a single or a double, and then the rest are
Yeah,
probably going to fail.
yeah,
We fundamentally believe that's not a founder friendly model and it's not an investor friendly model. And we don't do that. So I'm going to speak to this through our lens because we think of it kind of like the family office you're talking about, right? We don't have a fund. We didn't raise one on purpose.
yeah,
Um, we did that for a couple of reasons. One, so that we could avoid the fund dynamics of
yes,
looking at evaluating a company not based on their own merits, but the merits of, is this going to cover the losses in my portfolio? That's not a founder friendly message and not an investor friendly message. So we
yep,
create SPVs, just like you said, and we look at every deal on its own merit. And the outcome that we're looking for is 3 to 5x in 2 to 4 years. And there's a reason for that, right? It fits a sweet spot, right? It's not in this 10-year horizon. It's fundamental singles and doubles. And by partnering strategically for us, because like you said, your family offices are investing alongside directly, probably with the syndicate, with the lead
yes,
investor,
yes,
similar to us, right? So now we can look at that and say, okay, we're investing at a seed stage. We're legitimately 2 years away based on what we see in the forecast from a B round, or say maybe 36 to 48 months from a B round. B round is typically going to get the cap table cleaned up, so
hmm,
we can get out at that multiple in the B round, and we can safely say at 3 to 5x is a reasonable return within that
right,
3 to 4 year time period. The other piece of that, we're so big on partnerships. One, we think partnerships scale your go to market faster, but two, it sets the table for potential acquisitions,
right,
right? You partner with people likely bigger than you, more upmarket, and acquisitive in many cases. And this is starting to play itself out with our first investment that we did last year. We identified, first thing, 3 big consulting partners for that business that consult in physician compensation. Like that's what they do. And a couple of them are private equity backed and they're very acquisitive. And we're already in early talks with one of those. We're only talking 13 months at this point, less than 12 months. And we're in early stage negotiations on having that company acquired by one of those big consulting firms. So that's part of our thesis and what we look for. So I think the family office needs to take a step back and say, what gap in my investment portfolio am I trying to fill, right? Like I might be doing cash flowing real estate over here. I might have liquidity real estate over here that's like a land hold. It might be a 10 to 30-year hold, who knows? But that's just, we're expecting the asset to grow and whatnot. I might be doing long tail venture over here that's, your 10. What's filling that gap that we need to fill in our portfolio? And if you're looking at investing in software companies, can you invest in the type of companies that fill the gap in the portfolio that you're trying to fill? And that's how we're approaching family offices, frankly, is saying, do you have a sweet spot of a 3 to 5x return in 2 to 4 years in your business? Oh, you don't? Great. Consider us as filling that gap. And that's how I think family offices should think about it, whether it's that gap or another one. Where are they investing to fill? And then from a value add perspective, they need to be really clear on what it is they can bring to the table, right? Because it's easy to say, oh, you can tap into our CFO, or
Right.
you could tap into our FP&A team, or whatever it may be. I would get more narrow than broader and say, we've got a real sweet spot in our company around this thing, and we will deliver that to you as a part of a value add in our investment. I don't care what it is, but make it that one thing.
Fascinating. So going back to the founder focus a little bit, because again, I think
Yeah,
that's really your main value add that you've outlined from day one.
sure.
I mean, so can you walk me through some examples of, it doesn't have to be specific examples, but
Sure.
some examples of the types of things founders come to you with for help. Not what you identify, but what they self-identify and ask you for help.
Yeah. A lot of it is team dynamics and team management.
Yeah.
So one of the things that you find early on is they don't realize how much you have to say the same thing over and over and over again.
Oh yeah.
Just because you said it once, it really is meaningless, right? Like every meeting needs to start the same way. Every time you have a conversation, that answer needs to be delivered the same way. And it may feel obnoxious, and people might even start making fun of you, and that's okay. But guess what? At some point, everyone's going to answer that question the same way. When you go to market, everyone's going to say the same thing the same way about your company. And it becomes this way of setting the vision, getting really clear about the vision and where we're going. Because if what happens in startups is everything's a scramble, right?
Yes.
Everything's on fire, everything's a priority, everything's this, everything's that. And if you don't take the time to sit back and set the vision for where we're going, it gets harder for people to get on board and really believe in what it is you're doing. So we often see that materializing with the founder coming to us and saying, gosh, I'm having these team meetings and I can't seem to get, we've got these guys that seem like they're doing it, but there's this group over here that they're just not, they don't seem like they're coming along. What
Right.
do you recommend? Right. And that could be any team. That could be engineering, sales, marketing, like it could be anything. And
Yeah.
it does come down to, well, are you really clearly setting expectations? Do they know why they're following you? Do you know why you're asking them to do that thing? Because maybe yesterday you told them to do another thing and they're getting tired of the thrash. Right. So that's the thing that we get a lot of founders come to and self-identify is just like, I'm not getting this team to follow me. How does that help? And that's where you asked about Justin, right? Like he's really good at that vision, rallying cry. We say the same thing every time. We set clear expectations. We create this thread through every department in the organization that everyone latches onto, even though they
Yeah.
have different roles and responsibilities.
Yeah.
That's one of those things that's really, really important early.
Nice. You see, you say that, it reminds me of the way. So I studied medicine before I got into this side of things. I think I told you
Right.
this. It's the way your memory works, right? Like you can process information, you can get information, but it doesn't really crystallize until you've had a chance to step away from it and then come back and readdress it.
Right.
Yeah, so
Very well said.
so I think that's the process. You just have to crystallize it, and I think that training is required. It's important. Um, Before we run out of time, I want to go back to you a little bit. So, what do you do outside of you know, the VC game? Busy.
How do I keep myself busy? Well, I would say that my nights and weekends are probably busier than my weekdays because I have three kids and they're right in that sweet spot of there is some sort of activity
Yeah.
every day. So I have a 15-year-old daughter who's in high school and she is on the spirit line at her school. It's a competitive team. So they go to like states and nationals and all those things. So there's
It's
always some sort
very
of,
competitive. I've
yeah,
seen.
very competitive. It's insane. So, I'm actually most excited for her to drive. That comes up in about 8 months. Most
Okay.
people are terrified. I'm like, no, that's one less. There's only two of us and three kids. So one more driver is not a bad thing. My son is 11. He is on three baseball teams right now,
Oh wow.
which is absurd. There's no reason for that. And
Did you used to play baseball or was it hockey that you played?
I was a hockey player. Yeah. I mean, I played baseball up until I was about 14, but I played hockey in high school and college. But and then my youngest daughter is currently on a soccer team and a softball team. So, there's practices every night, there's games every weekend, and that keeps me fairly busy. I would say the only thing I carve out time for myself for is just to work out. I have a little gym I built into my house. I get up at 5 a.m. I train really hard just to try to have a little bit of time to myself and a chance to let out some energy.
Yeah, I mean, I remember when I met you when you came to Toronto, I was thinking like, damn, like Josh is tanked. Like this completely.
Well, thank you.
Yeah. So how about so your kids are athletes, you are an athlete, wife same thing,
Not so much. I mean, she played a little bit of softball in high school, but she not really.
and you know, in Arizona, um, what's the environment like business wise? Not just VC, but obviously it's a growing country, it's a growing
Mm.
state.
Yeah,
Uh, Phoenix and the surrounding areas are also, developing quite at a pace where real estate and businesses and et cetera are moving out of California into these
yeah.
types of states. What have you noticed and what do you think are the trends going forward?
Yeah. So, Arizona is a really interesting state in terms of the business environment. There's some pros and cons. The biggest standout to me, especially as we're developing a venture ecosystem, one of the biggest missing pieces is corporate involvement. We don't really have a lot of big corporate headquarters here. I think there's maybe two, three, four Fortune 1000s here now. We lost US Airways to American Airlines out of Texas now. The biggest public company here, that's by far the biggest company, if you ask 9 out of 10 people walking by, they wouldn't know who they are. It's Freeport McMoran. They're a big mining company. Other than a building with their name on it in downtown Phoenix, nobody would even know
Right.
who they are. They're not involved. They're not real present, that type of thing. So we don't have a ton of like high quality corporate involvement, unfortunately, here. I think that's a little bit of a downside. The upside is you've got big universities producing tons of talents. I mean, Arizona State University is the biggest research university in the world, the biggest public university in the country, you know, 75,000 undergrads, 100,000 plus students on campus at any given time. It's just a massive university. So there's lots of talent to tap into. And then you've got the U of A down in Tucson, you've got Grand Canyon University. So there's tons of universities. I think that's a positive thing
Yeah.
for growing talent. Um, from a software and venture side, it's growing. It's in its infancy for sure. Arizona has always been a very real estate heavy
Yes.
market. Construction, real estate, and tourism. Like those are like the
Built to rent.
big
Built to rent is just all over Arizona right now.
all over Arizona, all over Arizona. So, all the we'll call them the rich people. They're all commercial real estate people. Like
Yeah.
I'd say 3/4 of my LPs are commercial real estate people, right? Like that's where most of the money has been traditionally here in Arizona.
Yeah.
And I think that trend will continue, but I think even those people are having to get more innovative, right? In terms of how they run their business and how they continue to grow and create wealth at that pace.
Yes.
So it is good to see other industries, the startup community starting to rise up a little bit, the tech software community starting to rise up a little bit. Tourism's not going to go anywhere. Like this time of year, Toronto sucks and Arizona's awesome. So people are going to come here.
Listen, at most times of the year, you can say Toronto sucks.
Yeah.
Maybe 2 months,
So,
a good 2 months in the year.
yeah. So, and you know, we have so much built around that, right? Like we get Super Bowls here, we get the Waste Management Phoenix Open, the golf tournament. Right now, spring training just started. So there's just floods of people here, and that impacts the real estate market, obviously. You
Yes.
know, big homes are being rented out for $50,000, $100,000 a month, which is absurd. So interesting little sub economy.
Okay, last question.
Yep.
Founder looking to start a business today, right?
Mhm.
Maybe has an idea or maybe is looking for something. First of all, I don't really like founders looking for an idea. I think that's silly.
That's
So
tough.
let's cancel that. So
Yeah.
founders, they have an idea, they probably have the makings of a team. What are some early pieces of advice that you want to give based on what you've seen to avoid the initial pitfalls of starting a business?
Yeah. I think one of the first things you need to do is, and it could change, but create a vision for where you're going. Why are we doing this?
Yeah.
It's really hard to get people to rally around you without a why. Like cool is good, like pit stop. It's cool. It's great. But Shiva now getting down that vision, why people should follow him, lead him, where we're going, what we're trying to do. That's super important. And you get so focused on product, and then all of a sudden, now we got to sell the product, and you get so focused on sales, and then you're like, oh shit, we sold a whole bunch of stuff.
Yeah.
Now we're churning customers. We get so focused on customer success, like you can see it happen, right? It's this path of things that are going to happen because you got to build a product and you got to sell the product and you got to keep those customers happy. Like that's a pretty common cycle for early stage stuff. But help people know where they're going and why they should go there with you, and that stuff will work itself out a lot easier.
It's almost counterintuitive because everyone says the market tells you who you are. You don't tell the market who you are. But at the
Maybe.
same time, like you do get to craft the vision of where you think you're headed, and
Yeah.
so that's a very, very interesting challenge. I think whoever figures it out turns out to be successful, and those who don't aren't.
We all reserve the right to change our minds, right?
Yeah.
And maybe the market influences that, maybe something else influences that, but strong conviction and leadership are things that people rally around. It's not just a product or a widget.
We can go into this for hours, but I think people more and more nowadays are becoming more and more, I guess, focused on their convictions,
Mhm.
and not always open to changing their minds. So
Sure.
founders all the time now, they talk to me, and when I talk to them, they say, listen, like I don't want to sit here and educate people. I would rather just figure out what they want and just give it to them. But that therein is a problem because now
Yeah.
you have no vision. Now you're at the mercy of where the market goes, and the market is a fickle thing.
Yeah. Yeah. Your vision is what you believe in,
Yeah.
and it's allowed to be influenced, right? And if you're a founder, you're going to grow and learn every step of the way. I saw a post on LinkedIn from a friend of mine who I met him at the early stages of his services company that he built in the agency. And he did a tremendous job building that agency from 0 to 20 million,
Yeah.
hired a new leadership team, stepped out of it. Now he's trying to build a software company, right? And he wrote a post about his poor management of cash flow and receivables impacting the company, right? So we're talking a successful guy, built this business, making a good living, decided to do something else and realizing, oh, shoot, I screwed up because I didn't think about how managing cash in a software business was different than managing cash in a services business.
And I
Right.
love when people are upfront about it and actually talks about it because everyone tries to
Right.
hide their flaws.
Right. But his convictions are still the same. Like he's still a person people want to follow. Like you see all these LinkedIn, oh man, you're so great. It doesn't matter. You're going to figure out, you've got conviction. You know who you want to be. You made a mistake and you're going to learn. Like it is what it is, right? Like he's a very convicted person, and that's fine. People still want to follow him, even though he made a mistake. His company's not going to bail on him because he mismanaged cash flow.
Yeah.
Maybe somebody else would if you were a jerk.
So lesson is don't be a jerk and
Don't be a jerk. It's
just do
pretty
what you
easy.
can.
I tell my kids, don't be dumb. That's my first rule.
I mean, you would think that's assumed, but it's not.
It's not assumed.
It's not assumed.
Don't be dumb.
I will. Well, you know what? We'll wrap it here. Thank you, Josh, honestly, for making the time. I do think that this is a very interesting perspective because, and that's part of the reason why I wanted to speak with you because, look, I speak with families and I speak with institutions, and there's a very sort of narrow approach, narrow sort of mindset of here's my hit list, here's my criteria. If you fall into it, wonderful, right?
Yeah.
But it's different when you're coming from your perspective. It's like, okay, well, how can I come and help you? Maybe you're not exactly what we're looking for, but like, can I come in and is there a value for me? And I think there needs to be, I think, between both sides, a balance between the two.
For sure. Totally agreed.
Awesome. So, information about your company, information about your deals and etc. available on your website?
Yeah. Inrevenue.capital or inrevenue.com will get you there as well. Like I said, B2B vertical SaaS, 250K to 1.5 million in ARR. Anything that can help accelerate the go-to-market is a great fit for us. If your families want to talk to us, we'd be happy to co-invest with them. That'd be great. And don't forget to check out our podcast, which is the GTM Cheat Code. You can find it on all your podcast platforms.
Say that again, GTM Cheat Code.
The GTM Cheat Code.
We will put a link to it in the description as well.
Appreciate that.
Awesome. Thank you, Josh.
You're welcome. Have a good one.
You too.